Hello guys, glad to have you on board again today. Let's jump in because we have lots of things to talk about. The number one stuff for the flow trading strategy that we're in for those Wednesdays show. The thing is basically that remember what we said back then, we had lots of volatility alerts which made the technicals in this area pretty damn blurry. Same old assumption, we can hardly say if we had the required couple of consecutive bearish flows before being able to restart another flow sequence in here or not. And therefore we still had to assess both probability as being viable until we get them separated. Well, for now, we still haven't separated them. And we need to kind of consider both as viable possibilities. On the opposite hand, we've also said that depending on the choices you've made, there's one bullish scenario and more bearish scenario. And when you feel like you have two options, always opt for the ones favored by the low risk strategy side. As we're trading to the upside, you rather like to favor upside scenarios rather than the opposite way around, because this can't be 50-50 chances. Certainly not 90% and 10%, but it is something like 60-40, which means, well, this is not a significant gap, but it is still something that makes you rewarded if you make those choices over 100 trades. Of course, so that means back then we've also assessed that we had every requirement for a first flow to have happened. Remember that in here the moving average on the H1 time frame has been going like that. So the context I've been crossing over the moving average. That means this is good enough to say we had sufficient bull move to say potentially another set of flow will be started. The thing is that then you know the structure. Once you terminate the first flow, you're going to wait for a third range boundary. Thing is, yeah, we don't have it now. So I'm waiting for this to show up, all right? I would like to see the third range boundary in here, which would be my step number 2, okay? Remember, first flow is either coming from the low risk area of the low risk strategy time frame, or it comes from restart of a second flow, which means in here we had the first sequence of 3 flows, all right? We've had 3 flows, we have potentially or 2 consecutive corrective flows, and we would be on the verge to start another set of 3 flows, all right? But that's the same old structure. So in here, we just repeat the previous structure, which means we have a first flow, it has to cross over the moving average and stuff like that. Then we wait for third range boundary, okay? And then we're going to trade the rising moving average or the Bollinger Band. All right, and we're going to trade for the second flow, which will validate when we break the first flow major top. And then, of course, the second flow will live its own life until third range boundaries and the like. All right, I'll take the appropriate amount of time, hopefully this week, in which I'll be able to but to give you some kind of a summary PDF of some sort of these flow trade rules. They're pretty damn simple, but I want them formalized into a paper stuff. And I also decided not to put this into the Prezi just because, well, Prezi is for the lower strategy, basically, or the primary trends, alternate structures, ranges, and all of the lowest strategy that you need to know. Well, actually trading flow is a radically different stuff to me. It's not lower strategy at all. I mean, flow trading is what happens when you think the lower strategies are too larger of a time frame and you want to trade on lower time frames ones. It's basically dealing with arbitrages of lower strategies, which is definitely not the same task to me. So these things, I think, are separated buckets and they need to be on separate supports. So I don't think its place is in the Prezi. I think it's in some separate PDF stuff or whatever. I'll deal with it ASAP, of course, but I have lots of things to take care of now. All right? Though until then, the rule's still the same. I've mentioned that tremendous numbers of times, so you shouldn't be surprised. All right? Right now, I need to get to a third range boundary, which is step 2 of my sequence. Okay? And once I get the third range boundary, I'm going to be able to buy either the rising moving average or the Bollinger Band, the lower Bollinger Band, to get to the second flow. When the second flow is triggered, I'm waiting for it to break the previous high point, which will be step 3. At step 3, I can put all my trades at break even, not before. All right, and then the second flow lives itself until third range boundary. Okay, you know the drill. This is step 4. Okay, and step 5 is I'm going to buy only the lower Bollinger Band in here. Okay. Step 6 is breaking the previous high points, okay, and then so on, okay. At 0.6, what do? You put all those trades at break even, and you wait until the next third range boundary, which is 0.7, in which after consecutive 3 flows, you take the fucking gains and wait for another set of 2 consecutive flows, and so on, okay? And it can go on for absolutely tremendous long periods of time, all right? When you terminate a 3-step flow sequence, let a couple of bear flows and then start again, okay? So 3 flows, 2 consecutive correction, 3 flows, 2 consecutive correction, and so on. And these things can go on for much longer than you would be patient, all right? That's the way it is. Absolutely not complicated. All right? So that's the way. Right now, what I'm doing is if I consider this to be the first flow, and that remembers we have to take the assumption that the 2 consecutive flows have happened in here. We had very noisy signals. But until then, well, we need to be positive because the low risk strategy is to the upside. Okay? So we are cautiously optimistic. Until then, the first flow has shown us everything that we needed. Okay, so we will be ready to trade the second flow. Wait for a third range boundary, and then buying moving average or lower Bollinger Band, and waiting for it to break the previous high point to confirm. That's all I can tell, which means I'm waiting for a third range boundary. I'm going to buy either the moving average or the Bollinger Band afterwards with a stop loss, which will be approximately the size of the trend channel on the H1 time frame, and then either I'm going to be stopped out, take a stop loss, or I'm going to be confirmed. Until then, there's no fucking thing else that I would do, all right? It's really that simple to me. If I go to the H1 reference time frame to show it off in context, that's the thing, all right? Let's give it a second to plot. Come on, okay? So as you can see, no third range boundary. I'm going to wait for it to show up. The third range boundary, once it's done, as you can see, I hardly will be able to buy the moving average because it's pretty much going to be near the third range boundary itself. So I think my favorite now is going to be buying the Bollinger Band, somewhere like that. And I'm going to buy it. Remember, we've got the FOMC meeting, lots of catalysts. So be very cautious. If you buy this trade, certainly don't take this as a stop loss. Remember, we've got a volatility on the high time frame. So I will probably put a larger stop loss at a tinier position sizing. I'm still going to risk 2% maximum in here, but the thing is that I'm going to probably double the stop loss sizes. All right? I'm going to double the normal stop size when I will take that trade. And until then, I don't know. Remember, I will take that trade only if the sequence completes, which means I need to see a damn third range boundary first. And I'm going to buy the fourth one. All right? So that's the way it is. Don't mix up things, all right? The sequence is clear. You get the first flow, you wait for the third range boundary, and then you go for either the moving average or the Bollinger Band, all right? So in the current context, it seems to me like the lower Bollinger Band is going to be the target to be bought. But until then, I don't know. I'm just waiting for the third range boundary first, all right? And this 4-hour chart context in here definitely tells me to be very cautious, and I'd rather like to double my stop loss sizing instead of being aggressive. All right? So we've got it all. We're headed for the FOMC. Lots of things could be impacted by that just because, well, the market is currently anticipating another 25 basis point rate hike. And then rate cuts by September, which I personally think is full of shit. And I think the Fed is not going to raise rates, and is certainly not going to give any dovish standstill. All right, so that's really the way it is. We'll see. Maybe I'm wrong. Maybe I'm right. Until then, I've got all the things suggesting to be cautious. All right. When it comes to cryptocurrencies, well, I am still on the same page in here. Though our flow trading is still likely happening in the 4-hour chart, but as you can see, the context reacts with a lag. So that's what we've assessed. H1 time frame is utterly volatile and overextended, which seems like it isn't the right time frame to trade flows on, but the H4's context are lagging, okay? And we've got those weird structures in which we break both supports and resistances, which means, yeah, they do tend to fuck up technicals, and you have to be aware of that. There's no strategies in the world that can trade expanding wedge structure like that, okay? If you see someone who says, yeah, I know how to navigate these structures, well, full of shit. Okay, so you're generally going to have to take on these structures by surprise rather than being able to anticipate them. So in our structures, what I would say is that we have all the requirements. We've seen that the context has crossed over the rising moving average in here, so sufficiently bullish enough to say that we had the first flow happening in here. Then we should have gone a third range boundary. Well, we did not. We had that weird expanded wedge structure and some kind. But still, as you can see, the market has paid the moving average and it's gone immediately breaking the previous high point. So you definitely have the confirmation that despite the weird structure in here, we have started the second flow. Any trade you have in this area is at break even now. It's safe from any losses. Which means, well, why have I bought this area? Because I know that there are very few people who actually bought in here. So any pullback is probably going to be a nice buying opportunity on these markets. This is something that you certainly can trade on your own. I'm just explaining what I do in myself, all right? I know that looking at the nature of the previous bottom, I know that very few people actually took profits of these occasions. So I know that people will buy any drawdown, all right? The consecutive second flow, what do you know about that flow? You know that it will keep on going as long as there is no context reversal. So Jesus. This might sound bearish because we were going up and then we're going down, so same old short-term stupid assholes like, yeah, this is a Bart Simpson, or I've seen so much bullshit, okay? But remember one thing, all right? You don't overthink things in flow trading like ever. All you know is that you figured out the resonant time frame, it's likely the 4-hour charts, and you just follow the goddamn strategy as it is, all right? Let it behave. As long as there's no third range boundary, there's nothing you should be worried about. That doesn't mean you know the future, all right? I bought in these areas on Bitcoin, or mostly I did on Ethereum, which means my stop loss is approximately the size of the trend channel, and I'm going to be stopped if we go out there. Am I confident with that? Yes, absolutely. That means, well, if for whatever reason the prices has to go back down to 24K in Bitcoin, I'll take my stop loss, move on to another trade, and that's no biggie, all right? Until then, I think this was an opportunity for me to jump in for the trades that I missed. Basically, remember, this is where I couldn't figure out a trade entry in here. It was too weird of a structure, and the market came up without me. So that's really the reason why I'm just getting into the late trade. I'm absolutely aware that this is risky. And remember all I've said before. On flow trades, we generally have to go back one step to go further 2 steps. All right, so that's 1 step backward, 2 steps forward. So I know where we're headed next. That's the 30K, 36K. We're hardly going to be able to go anywhere higher than that. So by buying in this area, same story for Ethereum and Bitcoin. I know what maximum benefits I can get. Okay, that's really the way it is. Okay, I hope you know that by now. So don't do it on your own, and that's really the way it is. All right, I don't think it's bearish at all. And if for whatever reason that is, okay, we were to reverse the context, that will be the sign to me that I will have to take my profits on the third range boundary. All right, so this is really the way it is. I'm getting in here. I have a stop loss somewhere around 24K. If the market goes for the stop loss straight away, well, that's a stop loss. I'm going to take it. I'm not going to bargain, and I'm not going to yell either. All right, that's the way it is. Sometimes you're going to take losses. Just, I mean, grow up. It's got to be part of your job. And then, well, if it validates, which means if it breaks the previous high point, then I know my profit takings are on the maximum 1-to-1 ratio, and that's it. That's really the way it is. All right? Don't overcomplicate stuff. As long as we don't see a third range boundary, I'm not going to change my game. All right, so you know everything. Well, we're going to get an FOMC meeting. I don't know what the hell is going to happen out of it. My suggestion is, well, we're probably going to get a massive market shift, which means if for whatever reason we have no 25 basis point rate hike, that would confirm my assumption that the final terminal rate has been reached in March. Even though this may happen, and the market participants currently don't price that in the future federal funds rates, if that happens, then the market may be very volatile. But on the opposite hand, it's certainly not a bullish catalyst. Remember that if the Fed ever doesn't raise rates, it isn't, yeah, okay, to the moon, bro, all-time highs. No, because if the Fed doesn't, that's going to scare the fuck out of the market. Why the heck don't they do it? Do they fear more banking risks or stuff like that? Whatever, okay? On the opposite hand, the Fed is certainly not going to please the market by sending out some bearish comments. The Fed is probably going to say, yeah, we probably will assess the situation, but get ready. We could be started again next month with another 25 basis point rate hike. So they will not ever confirm the fact that the terminal rate has been reached out. Okay, so that's the thing. I think the next FOMC meeting is going to be pretty damn blurry for investors to read through the lines. So on that end, I don't know either, and I'm very cautious. But I'm still following the strategies that I have to follow any fucking way. I know the Fed could impact the market. That's the reason why I'm going to double every stop loss that I may take until that day and the FOMC meeting. And if I ever take to trigger trades by the FOMC or right after the FOMC meeting, can be damn fucking sure that I'm going to double the stop losses as well. All right? All the signals that I have, specifically in the S&P 500, show that volatility is going to be around the corner. Weirdly, I don't have any such a signal in terms of cryptocurrency, okay? As you can see, I've got no volatility alerts on Bitcoin, Ethereum, or the like. So it seems to me like, despite what the general public may think, I think cryptos are a safer bet now than actual stock markets indices. So that's the way it is. Until then, well, trade safely, double the stop loss, be aware of the risks, don't try to play God, and well, if it's end up being a stop loss anyway, don't fear losses. If you fear of making a bad trade, well, just don't start trading at all, because it's going to happen, and it's going to happen a lot. All right? It's part of the job, and you have to assess that. That being said, I hope you've learned something valuable today, guys. See you next week.